Okay, welcome back everyone to the deep dive. Today, we're going to break down the market action from June 11th. We're pulling insights, mainly from Grok Trade's daily market summary.
Right, and there were mentions of posts on X, some CNBC reporting mixed in there too.
Exactly. So the mission, as always, is to really unpack what moved today, key market shifts, economic signals.
And what happened with specific assets, it definitely builds on some things we were looking at just yesterday.
Yeah, absolutely. Yesterday felt like there was some real push, but today, I don't know, felt more like a pause.
Definitely a pause. And that pause, well, it brought some pretty interesting technical signals into the spotlight, especially after the strength we'd seen.
Okay, so let's unpack that pause. What did the overall picture look like by the end of the day?
Well, it started with a bit of optimism, but by the close, the main U.S. stock indices had pulled back modestly. Not a huge drop, but still a pullback.
Right. Looking at the numbers here from Grok Trade, the SPY, the S&P 500 tracker, it finished down 0.29%.
And the QQQ, tracking the NASDAQ 100, that dipped a bit more, down 0.34%.
The Dow, the DIA, that was pretty much flat though, right?
Yeah, remarkably steady. But then you look at the small caps, the Russell 2000, the IWM, that one declined at 0.41%.
Okay, and the IWM, this is where things get really interesting, isn't it? Especially for anyone who tuned in yesterday.
Oh, yeah.
Remember we mentioned Grok Trade specifically flagged the 200-day moving average as potential resistance for IWM.
We did. It's a big level, technically speaking. A lot of eyes are usually on it, sort of a line in the sand for the longer trend.
Well, today,
Yeah.
according to the source, it was almost like a textbook example. IWM gapped up at the open, pushed right up to that 200-day moving average. Grok Trade actually said it kissed the level
Yeah, that's a good way to put it.
and then sold off pretty hard from that point.
That specific action is so telling. It's just a perfect live fire example of how these key technical levels, the ones everyone's watching, can act like a wall sometimes. Yeah. You saw supply just step right in at that anticipated spot. For anyone, trying to navigate this stuff, seeing price react that precisely, it really hammers home why watching these levels matters.
Absolutely. And that specific reaction, it feeds right into another point Grok Trade mentioned today, a kind of yellow flag, they called it.
Okay.
Negative divergence showing up on the indices.
Negative divergence. Okay, maybe unpack that a little. What does that mean exactly?
Sure. So based on the source's explanation, it's when the price itself, like on the daily chart, keeps making higher swing highs. Things look like they're going up.
New recent peaks.
Some of the momentum indicators, think RSI and MCD, they're not confirming that strength. They're actually making lower swing highs at the same time.
Got it. So price goes up, but the oomph behind it, the momentum, is actually weakening.
Exactly.
And why is that significant? I mean, it doesn't guarantee a crash is coming tomorrow.
Right. No, not at all.
Yeah.
The source is clear on that.
It's more like a warning signal, a sign of maybe some underlying weakness, or at least that the upward trend might need to take a breather.
Yeah, like the engine's sputtering a bit, even if the car's still rolling forward.
Right. It sort of puts the ball back in the bull's court. They need to really step up and push prices decisively higher, maybe to new all-time highs to kind of override that warning sign. Otherwise, the divergence suggests caution.
Makes sense. And adding just another piece to that cautious picture, the source also noted the VIX jumped a little bit today.
The VIX, the fear gauge. Even a small jump there suggests maybe some traders are buying protection, hedging a bit.
Which lines up perfectly with this idea of technical caution kind of creeping in.
It does.
Okay, so you've got this technical picture suggesting hesitation, but the day started pretty optimistically, right? Fueled by economic news.
That's right. We saw reports referenced in the Grok summary coming from posts on X about the May CPI data.
And that came in softer than expected.
Yeah. Month over month was just plus 0.1%. The total year-over-year number was plus 2.4%. And core inflation, stripping out food and energy, that came in at plus 2.8% year-over-year. Relatively tame numbers.
So the market's first reaction, what did Grok Trade and CNBC say about that?
Well, that softer CPI print immediately sparked hopes. Hopes that maybe, just maybe, the Fed finally has the data it needs to start thinking about cutting interest rates. Maybe sooner rather than later.
Okay, so rate cut hopes getting fueled up.
Exactly. And then you combine that with some news, also mentioned in the sources, about a potential U.S.-China trade framework agreement.
Another potentially positive piece.
Right. So you had those two things kind of working together, and that's what seemed to drive those early market gains we saw right after the open.
Despite that positive backdrop, the soft CPI, the trade news, that early momentum just didn't stick around.
It didn't. The indices just sort of softened up as the day went on, which led to those modest pullbacks we saw at the close, the ones reflected in the Grok Trade numbers and reported by CNBC.
So it really felt like by the end of the session, that technical caution, the divergence, the IWM rejection, that stuff weighed more heavily than the earlier economic optimism.
For the broad market indices today, yeah, it certainly seems that way. The technical picture seemed to win out by the close.
Okay, now maybe we should shift gears a bit. Look beyond just stocks.
Good idea. The Grok Trade crypto desk also had updates on crypto and precious metals.
All right, let's go there. What's the latest on Bitcoin?
So Bitcoin, BTC, it saw a bit of a pullback today, down about 1.26%, trading around $68,200.
Yeah.
Grok Trade mentioned that investors are still really watching to see if it can get moving higher again out of that bull flag formation we've talked about.
Right, that consolidation pattern. Bulls are hoping it breaks to the upside eventually. Still waiting for that resolution.
Still waiting, exactly. It's coiling up. Now, meanwhile, gold, GLD, that actually had a positive day, rose 0.54%.
Oh, interesting.
Yeah, and what's notable is that's the third day in a row it's gained ground. And importantly, it's holding above its support trend line.
And didn't Grok Trade highlight gold's technical setup over the last few days? Something about an ascending triangle.
They did. It's been consolidating within that pattern, an ascending triangle formation.
Okay, so what's the significance of that?
Well, the source makes a good point. Each day that gold keeps consolidating inside this triangle, it's essentially building up potential energy. It increases the likelihood of a pretty strong, decisive move once it finally breaks out of the pattern.
So watch the boundaries of the triangle.
Exactly. Grok Trade suggests watching that horizontal resistance level at the top and the upward-sloping support trend line below it. Those levels will likely give clues about which way the breakout might go. It's a really fascinating pattern to watch develop day by day.
Definitely sounds like one to keep an eye on. What about silver, SLV?
Silver had another small down day, declined 0.84%. It's still kind of hovering right around that 33-layer level, just dipped slightly below it today by the close.
Okay, so we've got stocks showing some technical warning signs, Bitcoin still consolidating, gold strengthening within its pattern.
Yeah, it's a mixed bag.
Yeah.
And, navigating days like this where you have conflicting signals, specific technical levels coming into play, like that IWM move, it really requires a very disciplined approach. You need a plan.
It absolutely does. And this is actually where the source material, the Grok summary, brings up the relevance of their mentorship program. They really emphasize how having a solid, disciplined trading plan, the kind they teach, is just critical, especially on days like today, right? When you see that IWM rejection at the 200-day happen exactly as flagged beforehand.
It's true. It's one thing to know about the 200-day moving average, but it's another thing entirely to understand how price might interact with it, recognize the signal live, and actually have a strategy for it. And the source highlights that their mentorship covers, battle-tested strategies, risk management, which is crucial, and really learning how to spot and potentially capitalize on setups like that IWM example or the patterns we're seeing in gold and Bitcoin right now.
Right. And I think for listeners who might be familiar with Grok Trade or their program, you know that focus is very much on the practical side, understanding the why behind the moves, not just seeing the what.
Yeah, that practical application is key. They even mention in the source their unique model of providing support until you recoup your investment, which really speaks to that results-oriented focus.
It definitely shows confidence in their methods.
Yeah, it's that mix of solid analysis and disciplined, practical trading that really helps when the market's giving you confusing signals like it did today.